Okay. Hope everyone had a great weekend. If you guys can hear and see the screen, can someone put a 111 in the chat? Just want to make sure that my mic is working. If you guys can hear and see the screen, can someone put a 111 in the chat? Okay, good. You guys can hear. If you are new to this call, maybe it's your first time on the call, can you put a 222 in the chat? Let's see if there's anybody that's new on the call. Okay, we got a couple new people that are on the call. That's good. All right. So if you are new to this call, how this call goes, I'm going to introduce the slingshot template to you guys. We're going to go over the moving averages and indicators that make up this template. I'm going to show you guys the four patterns that I call the universal patterns and how I identify, trade opportunities. We're going to go over those patterns, and then I'm going to show you guys some examples of the slingshot strategy and how we use the three indicators here at the bottom to see change in momentum in our area of interest. All right. I'm also going to show you how I do my analysis and how I get a directional bias. We'll talk about entries, where to put stop loss, where possible take profit points can be. And hopefully you guys will get some value out of this. All right. So first things first, let's introduce the template to you guys. If you are new to the system, you want to right click your mouse and scroll down to templates. You're going to look for a template that says new JV6 or JV5 slingshot template 3MA. That is the template I'm going to be going over at the moment. All right. Now, the moving averages that we use with this particular template is we use a 12 EMA, which is your blue. We use a 17 EMA, which is your white. And we use a 32 linear weighted moving average, which is your green and purple. As you can see, that particular moving average changes color as price changes direction. And then you're going to notice in your chart is that we have these yellow and white lines. Now, the yellow and white lines represent support and resistance, and they also represent areas of liquidity. And because they represent areas of liquidity, we can use these lines as possible take profit points when we're scalping the market. And I'll show you what I mean by that when I start showing you some of the examples. Okay. Now, also in your chart, you're going to notice that we have our arrows. Now, the question that I normally get about the arrows is, do the arrows repaint? Can they repaint on you? And yes, the arrows can repaint, especially on 1 and 5 minute time frame. What I'm going to teach you guys is to, only trade one of these signals as when you have an analysis behind it. All right, we're never going to trade this signal unless we do an analysis and then work our way down to decide if we agree on it. All right. The only reason why the system was created was to verify analysis. It's not to just trade when the arrows pop up. I want to make that perfectly clear. I'm going to say this a couple times during this training, okay? We only trade the arrows when we have an analysis that agrees with the arrows in the direction of the price that is the same price should go, all right? Now, the system can give you alerts on the second and third arrow. That second and third arrow can give you an alert, but only use the alerts after you have an area of interest and have it marked. Because if that arrow pops up and you get that alert in your area of interest, then most likely you're right about your analysis and you can take that trade. All right. So keep that in mind as well if you decide to use the alerts. Make sure that you have an area of interest marked first. All right. Now, if you have a question about how to set up the alerts, there is a video in your PDF file explaining how to set that up. But if somebody has a question about it later on in the training, I'll be happy to go over how you do that. All right. Now, I'm one to not use the alerts. I'm usually here for my entries, but if you're someone who can't be at your chart all the time and needs those alerts, it does have that feature. All right. Now, before I get into the training, what I want to make clear is the three indicators here at the bottom are only there to show you change in momentum. These three indicators do not tell you when to enter the trade. They do represent slingshot. So when you're looking for an opportunity, what you're going to want to do is you're going to want to see how the market is showing you. What you're going to want to see is how the market is showing you a change in momentum in your area of interest only. So what you're going to want to do is a top-down analysis based off of a higher time frame, right? So if you're looking at the market this way, and you did, go to a 1 hour time frame, right? And you looked at the market and you saw the market was making higher highs, higher lows, higher highs, higher lows. And this area is your area of interest, right? And maybe you saw this on the 4 hours because there won't be an arrow there. And this is your area of interest to take a buy. You're going to notice that there's no arrows here. So if you were to take a trade on a lower time frame, you're going to be expecting the system to agree with that analysis. You're not going to want to trade the arrows. You're going to want to expect the arrows to agree with you. Okay. Just like if we were to look at this price action right here, this is a 4-hour time frame, right? The market went up, market came down. Even in this area of interest right here, I know if I go to a low enough time frame, there'll be arrows pointing in a direction telling me that the market is going to go this way. All right. So what I'm showing you here, if I go down to 15-minute time frame and I scroll back, you see how there's arrows pointing in that direction. If I go to the 15-minute time frame here, you see how there's arrows pointing in that direction, but there's no arrows on the 4-hour. There's no arrows on the 1-hour, right? All the arrows do is show you that there's a possibility that your analysis is correct. And do you agree with that signal? And does it go in line with your directional bias? All right. Now, once you've done that, right? Once you've done that type of analysis and you do agree with that signal, how the 3 indicators here work at the bottom is as follows, right? And I'll actually show you on this little example right here for a quick 1-minute scalp, all right? Now notice right here, we have the slight pullback, right? If I go to the 1-minute time frame, right? Look at this move. All right? Can I get this box out of here? You see how I have the signal down here? I'll zoom in on it so you can see it. You see how I have an arrow signal right here, right? Look how big this move is, right? This is on US 30, right? Look how big that move is. This entire move is just this on the 4-hour. Just that. That's all it is, right? Now I'm going to show you the patterns that I teach. I'm going to show you how to catch something like that all the way down in the 1 minute, right? So I'm going to go back to the 1 minute, right? Now notice that signal came in, right? So if I'm in agreement with this signal, right? All the 3 indicators here at the bottom do is ease me into the trade. All I want to do is see that change in momentum from the 3 indicators. So if you look at the 3 indicators here, what I'm going to do is draw a vertical line on that big arrow, right? And what I want to see from the 3 indicators here at the bottom is I'm going to want to see is first, is this stochastic oversold? And as you can see, we are below the 20, right? Next, what I'm going to want to see is this green signal line outside of the MACD, and is the MACD getting weak? And at this point, we are kind of outside of the MACD, but we can clearly see that MACD is getting weak. It went from small to big, and we do have divergence here if you know a little bit about that divergence. And then third, what I want to see from the XP4 indicator is, has it flipped to green? Once you have all 3 confirmations, then we know the momentum is on our side in our area of interest. All right, that's all the 3 indicators at the bottom mean. Doesn't mean enter the trade just yet. You could, but it doesn't mean enter the trade, because at that point we need to look at price action here and then decide how do we get into the trade with the best risk reward so we can put in a stop loss. Now, I'm not going to get into the stop losses and all that stuff yet, but what I want to show you is just how the indicator shows you change in momentum. But as you can see, once we've marked this area and we see bullish momentum in our area eventually where we think the market's going to reverse, look where the market goes. Just from there is 1,400 points. And if I can get all of this, right, say we got it at the moving average crossover, that's around 1,470 points right there, right? Another example of that would be this, right? This is just getting into how to use the indicator at the bottom. Nothing fancy just yet, all right? Go back to the higher time frame. We'll go back to the 4-hour, right? And then look at the market here, right? We have a high, a low, and a high. So if the market makes a high, what is the next phase? For it to make a low, which means a pullback is coming. Now, on a 4-hour time frame, the world is big. So if the market's going to make any type of pullback on a 4-hour time frame, you know that's going to be a significant move. So say you did decide to trade against this trend. We're clearly in an uptrend. In this area, what are you expecting the system to tell you? You're going to be expecting the system to agree that the market is going to do what? Pull back. We go back to the 15-minute time frame, right? See the arrows? See the arrows? The arrows are going to be pointing in the direction of your bias. If you analyze the chart and see that that's the next phase that should be coming. That's what we're going to talk a lot about is liquidity and how to identify what phase the market is in so you can predict what that next move is going to be based on that phase, all right? Now notice, our arrows are here, right? So if we're in agreement with these arrows, draw the vertical line, look down, look at the stochastic. We are overbought. The signal line starts to come outside of the MACD, and this indicator flips to purple. Now, purple means bearish momentum. All you want to see from the indicator is bearish momentum in our area of interest. The arrows are pointing down in the direction of our bias. And as you can see, market goes in that direction, right? Now, it all sounds simple enough, right? But you have to be able to analyze a chart, all right? If you just trade every signal, you might trade a lot of false signals. You might have traded this one and got stopped out here. So you really have to have an understanding of what you should be looking for before you place the trade. The system doesn't trade for you. All the system does is verify an area of interest that you mark based on your analysis, right? And what I show you today should be an eye opener, especially when we get into the patterns, right? And then I start showing it to you live, all right? But look at this. We'll do one more example, right? Do one more example. I wish that there wasn't any lines up here. Let's see what we can do. Actually, let's go to something else. Let's go to do it on like currency or something, just so people can see it on a currency. Right. So this is GBP USD. Right. Right. We're gonna go to 4-hour time frame. Right. We're just gonna kind of look at the market, right? 4-hour time frame. Market made a high, a low, a high, a low, right? And then it made a high. Right? So if the market made a high, what comes after a high? A low, right? So right in this area is where I'd be looking to take a buy, right? Right here, we have a high and a low, and the market broke structure. So right here, what do you expect the market to see? You expect the market to show you that the market's going to pull back. We are in an uptrend. So trading this pullback is low probability. If you wait for that pullback and you decide to trade that buy, there's your opportunity to buy. You should have arrows here and here based on what you know about the market. If I go down to a lower time frame, let's go down to 15-minute time frame. You see how we have arrows in our area of interest pointing up, right? See how we have arrows in our area of interest pointing down, right? Break of structure. The next phase for a pullback, the system is going to tell the market's going to pull back, and the system is going to tell you that the market is going to go up. You see what I'm saying? So it's up to you to understand what to look for so you can trade accordingly. All right. Now, same difference, guys. All we need to see is change in momentum. So if we were to trade this opportunity to the downside, right? Here's your big arrow. Here's your vertical line, right? See the change in momentum. Ease into the trade. Overbought, signal line, bearish momentum, right? Market goes into a push phase, we get a little pullback, we fail to break the high. You literally can enter right here if you didn't enter aggressively at the hour or at the crossover, right? And then look where the market goes. Market goes straight down, right? Now remember what I said about the yellow and white lines. The yellow and white lines represent support resistance, but they also represent areas of liquidity. So when we're trading, especially with the trend, right, we can clearly see that depending on what type of trade we're going to do, whether it be a small scalp or, a big, intraday or, swing move, we can look basically at each one of these yellow lines and know that there's liquidity here and that the market's probably going to come and take that out. Now, go back to the 4-hour time frame, right? If we know that the market just made a high, right, it just made a low, then we know that the next phase for the market to go straight up, which means it's going to break this high. So if I wanted to just make this high my take profit, and I go back down to, let's go to 30 minutes, right? You see how there's a yellow line right here, right? You can make that your take profit. Don't want to stay in the trade that long? You can make this yellow line your take profit. It's going to get smashed. Want to just get a quick scalp, right? Just want to, maybe you got it right here, right? You rode that to this line right here, to that line, this yellow line, right? Just from here to here, that's 100 and this is GBP USD. That's 113 points on GBP USD, right? Common sense would say to stay in it because you're on an uptrend. So you literally could have bagged 207 points on that trade to this previous high. All right. If you know a little bit more about structure, you know that you can stay in that trade even longer. Right. So that's how the system works. Very, very simple once you understand um, what the three indicators at the bottom are used for, right? Just to see change in momentum. We're not going to be waiting for the arrows. We're either going to expect them to be there, or we're going to expect them to pop up in an area of interest that we already have marked, okay? The same thing here. Very vertical line, oversold, signal line, bullish momentum. And then we're going to talk about how to get into these trades with the best risk to reward. As you can see, market goes straight up, right? Very, very simple once you understand that, all right? Now, the three patterns that I use is I use these three patterns here, guys, right? These are the universal patterns, right? Now, these patterns you're going to see all over your chart. You have to train your eyes to see this, right? We're going to show you a different, pattern as well, or show you the pattern in a different form, just so you get a better visual. But what you need to understand about these patterns is this is how the bank manipulates your brain, it manipulates your market. A lot of people, especially new traders who just get into the market and they're taught to trade off of support and resistance, or they're taught to trade head and shoulders patterns, or to trade off of trend lines. What happens with those types of traders, a lot of the time they're analyzing lower time frames, like they're analyzing like maybe the 15-minute, 5-minute, 1-minute time frame. And what happens is when you trade off of minor areas of resistance and minor areas of support, what's going to happen is you're going to go into profit, sure, but you're going to protect your trade above that high. And then what happens is your take profit is probably going to be down here, maybe this blue line. And the banks know you're doing that. They know you're analyzing a 15-minute time frame. So when you take that sell, right, and you put your stop loss here, the bank is going to do what? They're going to take that money and then go in your direction anyway. And I know it's probably happened to you guys, especially a lot of new trade. It happened to me a bunch of times when I first started trading. And it's because you don't understand this pattern, right? If you're trading inside of any kind of consolidation, especially if it's consolidation that's on a higher time frame, you're not going to be able to see that this area of resistance is consolidation, and that when you took that sell, you're not protected right here. The bank is going to sweep your money and then go in a direction that you plan to go in the first place. Now, this is a reversal pattern, right? The other part about this pattern is that it's the person who likes to trade a breakout, right? Maybe you see the market is consolidating, but you want to wait for the price to break out of consolidation. Well, the problem with that is that when you wait for a price to break out of consolidation, you get faked out a couple of times in the process. So you're tainted. A lot of it too is a lot of waiting. You're going to be sitting there waiting a couple of hours maybe, and you'll get tired of waiting, you get impatient, you just want to hit the button. And then all of a sudden it breaks out, and now you want to hit it, but you're too scared. So you'll wait, and then you'll end up entering in the middle of this. And this is where FOMO sets in. This is where fear of missing out sets in. And what happens? You'll go into profit a little bit, and then you'll hit this resistance line that you didn't see on the higher time frame, and you'll go from 20 pips in profit to 40 to 50 pips in drawdown, and now you don't even know if the money is coming back. And that's the problem with trading the breakout, because it's the wrong phase to enter the trade in. So in this process, you're reanalyzing everything. You haven't closed yet. Stop loss may have not gotten hit yet, but you're reanalyzing it. And what happens is you'll think, okay, wait, maybe this is a break and retest, and it should be coming back. And sure enough, what happens? Market starts coming back. It plays with you a little bit. Maybe it acts like it wants to come back here, right? And then when it comes back here, you'll reanalyze it again. You go, oh, wait, that's a double bottom. I'm good, right? And you're not worried because now you know that's a double bottom. It's going to take off, right? Well, wrong. This is a reversal point. You just didn't know it because you look at the higher time frame. And what happens is the bank is creating liquidity to fund their move to the downside. So what happens is you're all hopeful because the money's coming back, right? And then you're really hopeful because you're back in profit. You're not going to close. The bank knows you're not going to close. He knows you were already emotional, right? They're going to enter the trade right here, and then they're going to come straight down and take out the liquidity that they created right here, and then run price down into take profit 1 or take profit 2, right? Now, this is the reason why, you go into drawdown when you enter your trades, or you go into, or you get stopped out. It's because you don't understand how to identify this particular pattern all the way down to your entries. Now, what the bank does is the bank constantly is taking liquidity and creating liquidity. It's doing it over and over again. So out of consolidation, This particular move right here, where the bank comes up and stops people out, that is where the bank is taking liquidity. All these people who sold, they're getting stopped out, right? This process right here is where the bank is creating liquidity. So they have enough money to move price to the downside because they want to reverse price, right? So what they do is they go into what I call a push phase. And then right here, these little green lines right here, these are buyers, retail traders that come into the market to buy off of this support. Because maybe there's a guy who was taught to break and retest. I know you were taught that, break, retest, and you bought right here. There's a retail trader who bought right here, right? Those retail traders are going to put their stop losses below these little peaks right here. And that's where the bank is collecting orders from. They're going to take the money from these retail traders, right? The bank is going to fail to break this high, right? And then all the money that these people who bought left below, the bank is going to come swoop it. The moment the bank comes past these little points right here, the bank is funded to go to take profit one. Now, this little line right here, this support area is going to be take profit one. And the reason why is because we had buyers who bought off of that support, and they too protected their money below here by putting stop losses. So what the bank is going to do is he's going to come past this low as well, right? Take out the liquidity. And before it gets to take profit two, what do you think they're going to do again? They're going to trick buyers again, right? These buyers, these retail traders who bought off this support will put a stop loss below this low. What the bank will do is get in right here at the top of this, right here. And then what does the bank do? They come straight down. The moment they pass this low, they stop out these buyers. And then boom, they have enough money to get to take profit too. And that's what you have to identify on the chart. And I'm going to show it to you on the chart as many times as I can. This is how the bank moves the market. And once you identify that, you have a lot more confidence entering the trades because you know what you're looking for, right? Now, the thing about it is you have to understand there's a difference. There's a reversal pattern and there's a trend continuation pattern. Sometimes break and retest works, but it really only works when the market is trending. But the market is reversing, right? Then this pattern is what you're going to be looking for, all right? Now, same thing for reversal to the upside, right? You're going to have buyers who buy from bottom areas of support. They're going to put their money below here, protecting it, right? Try to get to this take profit. The bank knows you did it. They're going to stop you out, run price into a little bottom area of support or a major area of support. This is a reversal. And then the bank's going to do the opposite. They're going to go into a push phase. That's the green candle. Now, instead of tricking buyers, they're going to trick sellers. Those sellers are going to put a stop loss above these highs. Sometimes they'll double dip, right? They'll do, a little bit of consolidation right here. There'll be a stop loss above this high. And then what do you think the bank's going to do? Enter below and then come straight up and take out the money from these little retail traders who sold off this minor area of resistance, right? Once the bank collects the order, they're funded to go to the upside. And it's the same exact thing, just the opposite. When they pass this high, the sellers who sold over this area of resistance, we have their stop losses here, they get stopped out, right? If the bank wants to get to take profit too, because they run out of money right here, they will trick sellers again. Those sellers will put a stop loss above this high. And then the bank will enter low, right? Because you got to, buy low, right? And then now they're going to seek out the stop loss. They'll take the money, right? And once they take the money, where are they going to go? Take profit too. And they'll get to that blue line. So you always want to enter trading toward the liquidity. You want to enter the trade after the bank already takes liquidity because now you're in a push phase. So you want to identify where the market is before you enter the trade. You always want to enter trading toward liquidity, even when it's time for your entries. Okay? Now, these are your patterns for your reversal. Now, your trend continuation patterns are basically what you're going to look for after these two patterns have already happened. So this pattern is what you would look for once price gets below this structure. This pattern is what you're going to look for when price gets above this structure, right? So once price gets above this, right, now we're in trend continuation. This pullback where the bank is tricking sellers is this phase right here, right? We're going to trick sellers. There's going to be liquidity above this high. We're going to probably get tricked right back down into support. This is where you can trade that break and retest. Break, retest, and then entry for your trend continuation. That's when this works. Okay, right? Same thing for this one, right? Once we get below this low, right? Now the bank's going to do what? Trick buyers. There'll be stop losses below this low. So same thing. We get below the low, we trick buyers. Sometimes it consolidate a little bit, right? And there's going to be multiple strands of liquidity below here. This consolidation for the bank to target. The bank will enter high. They'll stop out these buyers here, these buyers, and these buyers. And then once they take all that money, then they'll be funded to basically make lower lows and lower highs. They'll take out this money, they'll run out of money, they'll trick buyers again, they'll be stop losses below here, and the bank will just keep going. Right? That's what you're going to look for on your chart. Right? And I'll show this to you live on the chart, right, in a second. Right now, you're going to see this pattern on many forums. You're going to see it in like a big form on a higher time frame. You may see it on a 5-minute chart, and you may see it this big, on a 1-minute chart, or just in trend continuation. Because once you understand how the market moves, all it is to take liquidity and create liquidity over and over again. All right. Now, in this diagram here, I'm pretty sure you guys understand higher high, higher low, higher high, higher low, higher high. And I know you understand once price breaks structure and starts to make a lower low and fail to break the high, now you have lower lows, lower high, lower low, higher high. Now, the science behind all of this and how the banks move the market is just this. In an uptrend, every time the market pulls back, that is the bank creating liquidity. So just know this. Every time the bank pulls back, right, in an uptrend, the bank is creating liquidity. That means that at this point, there's an area of resistance that a retail trader sold against the trend. Up here, retail traders sold against the trend. That means there's a stop loss above this high. That means there's a stop loss above this high, right? So to get into your trades with the best risk to reward, you want to enter at the lowest point and trade toward the liquidity. So if there's liquidity above this high right here, you want to be able to enter the trade low so you can trade with the banks to go take out the money above this high, right? That's what you need to understand about the market, right? Right now in a downtrend, right, when the market reverses, you notice how the bank went below this low, right? If we go below this low, that means that the bank took money from these buyers, right? These buyers got stopped out, right? So if the bank takes liquidity, what did I say the next phase is? The next phase is to create liquidity. So you know that a buy is coming because they have to create liquidity below this low in order for the bank to go lower. All right. So right here would be an opportunity to buy, right? Because you're going to be buying the bank creating the liquidity, right? Now, once the market gets up here, right? What do you think is below here now? Liquidity. Because now there's a buyer who put a stop loss here, who thought that the market was probably going to do this. Continue, but it didn't. It failed to break the high. These buyers protected their money here. Even in this uptrend, there's probably protection on each one of these little, buys that people took during this uptrend. So the bank is going to do what? Enter high and then ride it down past this low and take the money. They're going to take the money from these buyers who thought the market was going to continue to the upside, right? Notice when the bank takes money from these buyers, we took liquidity. The bank creates liquidity. You see what I'm saying? Every time they take money from buyers, the next phase to create liquidity by tricking buyers to buy for this little minor area of support, right? The bank is going to fail to break this high, and then the bank is going to do what? Enter high to take out the stop loss that's below this low. Now, when you enter trades this way, right, you get a better risk to reward because for one, and you don't go into severe drawdown because you're trading with the momentum of the bank and how the market flows, okay? The bank always trades toward the liquidity that it's created, right? If it takes the money and then tricks buyers into buying, and those buyers protect the money right here, the bank is going to trade toward to take the money. And that's what you need to identify on your chart, okay? Very, very simple. Now, I'm going to show you a live chart now, right? Let's go to US 30. Let me show you what I mean, right? All right, let's go to US 30. All right, now, this is US 30 on the daily time frame, right? Now, what I want you to see, and this is, kind of some of the easiest trading. Look how the market is doing this. The market's making higher highs, higher lows, higher highs, higher lows, higher high, right? Higher low, and then higher high, right? Now, notice right here, right? We have break of structure, right? See how this went above all of this price action? And honestly, we could just do this, but this is the same thing, right? See how we have a high here? And this wick went above that high? That is a break of structure. That means that the people right here who sold got stopped out, right? Now we're in an uptrend, right? So if the bank just took money, what is the next phase before it can go higher than this point, right? To create money. So notice the market pulls back. So if the market pulls back, that means there was a seller in the market. What do you think is above this high right here? A stop loss, right? But there's a stop loss here. Right here, the bank is going to do what? We're in an uptrend. It's going to seek out the stop loss. Now look, if you know this and you enter here, the system is going to tell you that the market is going to go up in that area. If I go down to, I guess, let's go to 30-minute maybe, right? See the arrow right here? The support and the arrow. It's telling you that there's liquidity above this high, and I need that money. So if you made the yellow line, remember I said you can make the yellow line your take profit. If you'd have took this trade and made that your take profit, and you enter this moving after crossover, that's 8,000 points right there? Just to there. All about understanding the market. Now let's go back to the 4-hour time frame, right? This is going against the trend, right? Go back to the daily, right? Look, you have a high and a low, right? And a break of structure, right? If you get a break of structure, right, in an uptrend, right, then you can automatically draw your pattern automatically. Now I'm gonna draw, and then we'll go back to the diagram. Break of structure, high. Now I have a low, right? We're in trend continuation. This is an uptrend, right? So what pattern do you think we're trading now? Look, this pattern, right? High, low, break of structure, but we're in an uptrend. So the bank's going to create liquidity, right? It does come a little bit deeper in this diagram, right? Comes a little bit deeper, right? The bank's going to create liquidity. That means above this peak is a stop loss, RTP, reason to push. Entry can be here or here. Now look at the diagram, guys, right? Look, high, low, break of structure. That's where you're going to enter. Above here's your liquidity. Let's go back to, let's go to 15 minutes. See if it's a little bit better on 15 minutes. All right, here's the 15-minute time frame. Ooh, we had a lot of consolidation right here, but that's fine. Right, now look. Above this high, we already know that there's liquidity, right? See, this is your break of structure right here. This is your break of structure. This area right here is where the bank pulled back into. And this area up here is where the bank is going to target because they know that there's money above these highs. They know there's money here, right? So we'll go to a lower time frame so you can see it, right? You see how there's money here? The bank pulls back, and then you enter here, and then it targets this area. And then just like my diagram, look, market goes up. When they take the money, what's the next phase? To trick sellers. Above this high will be liquidity, the bank goes up, right? Once they break structure, what does the bank do? Create liquidity by tricking sellers again until it's ready to reverse. And as you can see, at this point, we've broken structure. So now the bank's creating liquidity again. You see how we're kind of pulling back again? Now there's liquidity above these highs, right? Liquidity above these highs. We've pulled back into support. Look where the bank goes. Above these highs. And that's how the market works, guys. That's what you have to identify on the chart. That's why I say do not complicate your analysis because it's all about what phase the market is in, right? Now, I'm going to go back to the, I need to go to this chart. Right, we're going to go back to the daily, right? And we're going to talk about why the market was selling today, right? Now notice, we have a high, a low, a high, a low, a high, a low, and then we have this huge candle right here, right? Right, and we've been buying for quite a bit. So just like I said, we have a high here, right? And a break of structure. See how this went above that high, this green candle? That means that in this pullback, a seller sold, and this candle stopped out the seller who sold against the trend, right? The moment you get a break of structure, you can draw your pattern. So I'm gonna do it again. I have a high and a low. If we have a break of structure, what is the next phase after a break of structure in an uptrend? For the bank to go into this push phase, right? So if this is the push phase on the daily, then this is going to be a significant move on a lower time frame. So let's go back to the diagram, right? High, low, break of structure. In order to go higher than this, we have to create liquidity. So right here, you can draw a box, go down to 30-minute time frame, right? See the arrows right here. And what are these arrows telling you? That the bank is getting ready to do what? Create liquidity. So what did it do? It pulled back, started making lower lows and lower highs, right? Lower low, lower high, lower low, right? So this is the momentum of the market for the day, right? Right? But you can dictate why it's doing this based on what phase the market is in on the daily time frame. And it's all based off of these patterns, guys. Very simple, right? So once you see that, right? Once you see that, then even inside this movement, you can still trade your pattern or a pattern because now you have to understand what phase the market is in this pullback. So look at this, right? Now we know the market has to pull back, but we know overall this is not a reversal. This is a pullback, right? So say you saw the market consolidating. That's where this type of price action comes into play in the diagram, right? See how you have this consolidation, right? Now you have the breakout. This is what happens when people are like watching this happen, this consolidation, and they're waiting for this, right? And do you see how it's kind of hard to catch this and understand it? Like right here, it looks like it's breaking out, right? So you entered here, and then it comes back and stops you out, and then goes your direction anyway, right? So if you try to catch this, right, you're either going to get lucky and just catch it, but even when you catch it, you're catching a push phase, which means if you don't close here and your goal is to get down here somewhere, well, the moment it does this, what are you going to think? Oh, shit, that's a break and retest. And now this is going above that high and you're going to lose. So you'll close. You won't hold it, right? That's your thought process because you're going to keep rethinking things, right? But really, what is this process right here? This is the bank creating liquidity. Because now you have a push phase, right? We know not to enter in this phase. The next phase, in order for the bank to go lower than this, is to create liquidity by doing what? Tricking buyers. Below this low will be what? Liquidity. I like to put RTD. RTD means reason for the market to drop. This is me identifying a reason for the market to drop, right? And then right here, right? Notice we already have a moving average cross, and we come back into the moving averages. We're right back at resistance. You can enter here. If you enter your trade here, right? Stop loss can go a few pips above this high aggressively or conservatively above this high. At this point, you're committed to the trade, right? Now your take profit, because you're in a downtrend, could be either this area of support or you can decide on a number of points. Me, I like to go for 1,000 points. This is 30-minute time frame, so it's gonna be a little more than that. But look where the market goes. That's 5,200 points, right? And you know that the market's gonna at least go where? Here, because liquidity is here. So say you made this area your take profit, right? It would get smashed for 3,000 points, right? Now notice I'm on a 30-minute time frame, right? So say I want to signal the time that the market's going to go down from here. Well, if I go to a lower time frame in this area, the system should tell that the market should drop. If I go to 15-minute time frame, I have resistance line. If I go to the 5-minute time frame, I'll have arrows. See the arrows? Telling you that the market's going to drop, right? Boom, smashed. That's why I say the system is only used to verify analysis. You have to understand how the market works. Okay? Have to understand, right? Now notice in this diagram, we had consolidation and then a breakout. This breakout is the bank taking liquidity, right? Just like this. Which one is it? I lost my train of thought. Well, I guess it's this one. It's the bank taking liquidity from these buyers. And then to go lower than this point, they trick buyers by creating liquidity. Same thing here. They took liquidity from the buyer. See how there was a buyer support, right? They took that money, and then in order to go lower than this point or back to this point, they tricked buyers to buy for this support. They pulled price back into here. And then below this low is liquidity, stop losses. The bank knows that. You enter here, you write it down to get the money. Very simple, right? You see how those patterns work, guys? See that? Low, high, break of structure, trick buyers, entry. Then you take the ride to the downside. All right? All right, let's go back. All right, let's go back. Okay. Now, what you guys have to understand about the market as well is that if you don't understand the difference between time frames, what's going to happen is you're going to get lost when you get down to the lower. All right. So on a 4-hour time frame, the data that's produced just in this little area right here, honestly, like even right here, you're trying to trade at a 5-minute or 1-minute time frame. The data produced just right here is significant on a 5-minute or 1-minute time frame. And this is the time where you're trying to trade on, right? Look at all this data, right? Go to 1 minute. Look at all the data. Just that little area. See that? Boom. These are the time frames you're trying to trade on. So you have to be able to, why is this freezing on me? Oh, come on. Right? So you have to be able to understand the difference, right? So when you're looking at opportunities, don't rush them because the bigger opportunities are going to be on the higher time frame. That's the reason why you start here, right? By looking at the daily, looking at the 4-hour, because these time frames are going to dictate the play for the day. The daily time frame dictates your play for the day. If you're somebody who trades every single day, that daily candle is going to tell you where the market is going to go. All right. Now I'm going to show you these moves to the downside since I've been showing them to you to the upside. All right. So look at this. All right. This is the daily time frame, right? So say you wanted to look for an opportunity to swing, right? Notice we have lower lows, lower highs, lower lows, lower highs, lower low, lower high, lower low, lower high, lower low, right? Now notice every time price breaks below one of these lows, right, you could draw the pattern. Look, we broke below the low, which means I have a pattern, right? Low, high, break of structure. If you see this happen on a daily time frame, then you know that there's going to be a significant move long term, right? So look at this. Low, high, break of structure. The market has to run into an area of support. So look here. Low, high, break of structure. That's obviously support right here, right? And to check that, we can zoom out and look left. See how there's a break and retest perfectly on that line. So we know long term, we should get a move to the upside. Now, even on the daily time frame, look at this. Now, if that's the case, the market's going to go to what? In a push phase, and then the bank's going to do what? Trick sellers and fail to break the low. Look at the diagram. Push phase, trick sellers, push phase, trick sells, but we never broke below this low. Now look at the diagram. Push phase, we trick sellers. That means above this high is an RTP. RTP. Reason for the market to push, right? So right here, if the market comes down here, you can enter the trade because you already identified liquidity. If you're confident in this reversal area, right? Now notice the market goes up again and pulls back again, but fails to break the low. We have an engulfing candle here. That means there's an RTP above here. This little bit of consolidation of a sideways movement is the bank collecting orders. They're tricking sellers, even buyers on both ends to collect enough money to move price up. So then right here, if you identify the RTPs and liquidity and you enter below it, you're going to be trading toward it. And then once you pass these points, you're funded to go to take profit. What? One, which would be this high, right? And as you can see, market goes straight up, right? Notice low, high, break of structure, push phase, pullback entry, push phase, pullback entry, as long as price doesn't break the low, right? I'm going to show it to you again, right? To clear it up, right? Now look here. We have a low and a high and a break of structure. Look at the diagram, right? We have a low and a high and a break of structure. We break below this low, the bank took liquidity. All right. We broke below this low. The bank took liquidity from these buyers, right? So if this is a strong area of support, right? Double check, zoom out, look left. We ran right back into resistance, strong enough for me. Great. Go back to the daily time frame, right? Now look, what is next now? We're at a strong area of support. And we have a break of structure. What can we draw? We could draw a pattern. Now look, I have a high and a low and a break of structure, right? High, low, break of structure. What is the next phase? Push phase, pull back, push phase, pull back. Push phase, see the bullish candles? Push phase. We break above a high in here. Right here is resistance. A retail trader is going to sell, thinking the market's going to continue. Above this high will be what? RTP. Right? That's me identifying the order. RTP means reason for the market to push up. Right? We failed to break this low. We have a moving average crossover. I've already identified liquidity. Your entry should be right here. Right? Right here. Below the RTP before it breaks it, or before whichever one you identify. Right? And then look where the market goes. It goes up to this high. Boom. You see what I'm saying? The pattern is universal. It's on every time frame. I can show this to you on a 1 minute time frame. Doesn't matter. It's just you have to understand where the market is going and what phase it's in on that time frame. Right? Go to the 1 minute. This is a 1 minute time frame. Right? I'm just going to show it to you in this downtrend. Right? So look, we have lower low, lower high, lower low, right? And then lower high, but then we did break above this high, right? So we're in the downtrend, right? We broke above this high. The moment you break above a high, what can you do? See how we have a wick here? This went above the wick. If you get a break of structure, what can you do? Draw your pattern, right? Low, high, break of structure in a downtrend, right? We got a push phase. We didn't get much of a pullback. That's fine. It did consolidate here for a little bit. We did get a moving average crossover. This would be a sketchy entry, but look, we know that below this low, right? This is how perfect this is. Look, we know there's stop losses below this low, right? So we know this could be our take profit, or we could just say the white lines are our take profit. And say we did enter right here, right? Just for shits and giggles. We entered right here. That's 1,000 points, right? Notice I did say that there's liquidity below this low, right? If there was a buy here and we go below this, we stop somebody out. What is the next phase if the bank takes money? To create money. So what do you think this is? The bank creating money, which means what's below here? RTD, excuse me. Reason for the market to drop. Trend continuation pattern now, right? Your entry would be here. You can literally just do this here and then make this low your take profit. If you know there's stop losses right here below this low, you can get in right here and go, boom, 700 points. Do you see? Because you know it has to go below this because that's where the money is. Do you see? And you notice I'm drawing the pattern every single time I take a trade, right? I've been drawing every single time. Low, high, break of structure. Then we broke structure here in the continuation trade. So now we're low, high, break of structure, trick buyers, and then trade for the RTD. You see? Low, high, break of structure. We trick buyers into buying, right? Retail traders bought. They protect their money. The bank takes the money. And that's the reason why the market does this. Lower low, lower high, lower low, lower high. Every pullback, every bullish candle in a downtrend is the bank creating liquidity. Every time you see this, and there's a peak behind it, there's money below it in a downtrend until you get a break of structure to the upside. There's money below here. There's money below here. There's money below here. You enter above it after you spot this, you're going to get to profit. If you enter above this peak, you're going to get to profit. If you enter above this, you're going to get to profit. Do you see? And I honestly think you know this, but you've never heard it worded like this, right? And then the moment you get a break of structure, right? You get a break of structure, and the market pulls back and fails to break this low, multiple positions. Now above this high is RTP, right? RTP. And what do I say? If you get a break of structure, what can you do? Draw your pattern. Now, what does this look like? Trend continuation. Low, high, break of structure, right? We get a break of structure here. The next phase is to trick sellers. Sometimes they double dip and make a double bottom or W pattern, right? And then, above this wick is a stop loss. The bank will take it. Look at the pattern here. This is all the 1 minute time frame, right? Break of structure. We trick sellers. Mark goes up. That's how perfect the pattern is. Look, Mark goes up, down, RTP here, RTP here. As long as you enter before price breaks above the RTP. I don't care if you enter right here, right? The bank's going to take this money and be funded to go where? You can say this is your take profit one right here. This yellow line. That's take profit. I can move the line up a little bit, right? I did say that those lines would be liquidity, right? But look where the market goes. Right to that line. See, perfectly to that line. Look. Arrows are already right there. See? And that's your trade. That's what I want you guys to understand. It is a universal pattern. Understand what a break of structure is, right? And then trade accordingly. That's it. All right. All right. So just show this to you on GBP USD now. All right. And I'm going to show it to you on the bigger picture too. I'm going to show this to you even on a weekly time frame. All right. So this is the weekly time frame on GBP USD, right? This is the weekly. Actually, let's go to the monthly. It'll let me. Oh, that was stupid. It froze. Oh, I shouldn't have did that. Fuck. Crap. I knew it was going to do that if I went to the monthly. Maybe it'll come back. We'll pray that it comes back. Are you going to show me the monthly? Come on. If you're not going to show it to you. All right, let me shut that one down. All right. Let's see. I see the screen. All right, so let's go GBP USD. All right, so this is GBP USD. Right, we'll go to the week. It won't go to the month. I don't know why. Maybe that's too much data for the. Right, but look at this. This is the weekly time frame. Right, now notice. You see this, right? Notice we have consolidation, right? And a break below, right? So if you get a break below consolidation, then you can draw your pattern, right? Now we're already in a downtrend. So if we have a break of structure out of this consolidation, in order to go lower than this point, the bank had to do what? Trick buyers, right? We're continuing to the downside. So right here is an opportunity to do what? Sell. Now look what happened here, right? We had a higher low, right? Lower low that made a double bottom, right? Higher low, right? And then a lower low. So even right here, we had a break of structure. Look at this. So imagine if you saw this on the weekly time frame, right? We were down here. You can already draw your pattern. Right here is your opportunity to buy because what do you know is going to come next? After the break of structure, we just broke structure. We stopped out buyers. In order to go lower than this, we have to go this way. So on the weekly time frame, you should be able to just go to the 4 hour and then boom, what is sitting fat right here? Your signal. Telling you you're right. Look, there's your arrows right there. And then where's the market going for the week? In that direction. So if you know that, and the market's making higher highs and higher lows, you're on the 4 hour time frame, you already know that the market's in the phase where it's creating liquidity, right? We're in a downtrend overall, right? But we're in the phase of where we're creating liquidity. So higher high, higher low, doesn't even matter. You can just keep looking at the market, like higher high, higher low. We can put the days on this. Let's put the sessions on here so we can do the appropriate day. Right. So let's go to the 1 hour so we can see it. All right. So look, the market is making highs, lows, right? break of structure, right? So what is the next phase after this? This push to the upside. The next phase is to do what? Trick sellers. So right here is an opportunity to sell, right? Well, let's go to 15-minute time frame. See the arrows? Go to 5-minute time frame. See the arrows? Now, this is currency, so you know you get tons of consolidation, right? But look at the market. It goes to a push phase, right? The market does pull back. You can't predict this. So say you entered here, your stop loss is above here, and you just walked away, right? Look where the market goes. That's going against the trend. So that's low probability, 126 points. But you know a pullback is coming. You know it's coming. Why? We just broke structure. We just took money from all of these buyers, right? Way up here. We took money. If we took money, we have to create money to go higher. So there's your opportunity to sell against the trend. Now, if you don't want to sell against the trend, then you wait for this, which would be the smarter thing to do, right? We know we're in trend. We know we're in an uptrend because we've already identified it on the 4-hour time frame, right? Or on the weekly, right? Because we broke structure, so we know we're in an uptrend because we're creating liquidity. So we know we got to go up, right? So look, go back to the 15-minute time frame, right? Right here's your opportunity to buy. So what pattern are you trading now? Trend continuation. Above this high or this whole consolidation is RTP, reason for the market to push. Right? You're going to enter below the liquidity, right? You're going to enter below to trade toward the liquidity, toward these highs. As you can see, when you learn to do this, you're going to minimize drawdown because it has to go in that direction to take the money, right? Now, if you enter at a breakout, right? Say you were trading this consolidation, right? Say you were waiting, you saw this consolidation right here, and you're waiting for this breakout. This is what happens, guys. Just like this. I'll go back. Oh, I can't go to the diagram. Right? This is what happens. You enter here, push phase, and then you get caught in this because you're trying to trade a breakout. Do you see what I'm saying? That's why breakouts don't work. And then what happens is, right, this could still be an opportunity for the market to go up because there's an RTP above here and the market comes back, but you won't hold because you either over leverage and you probably can't hold. But if your lot size was small enough, you probably could have held and the bank might come above here and take out these highs. But you entered in the wrong phase of the market. You entered a push phase, now you get caught in that. That's the reason why you trade toward liquidity, not after liquidity has already been taken. Okay. Right. So you see how liquidity works, and how you can use that to analyze your time frames, all the way from the weekly all the way down to the 15-minute. It just all depends on what phase the market is at the current time, right? So if I came to the chart right now and looked at this, I would say the market is in a push phase, right? We did break above this high. See how we have wicks right here? We broke above these wicks, right? So what's the next phase after that? To trick sellers. So what do you think the bank did? Right? What's it doing? See the arrows? We're above that high, right? It might go up a little bit higher, but at some point, the bank is going to want to pull price back. After you take money, you create money. Very, very simple, right? Just understand the difference between the time frames. If you're going to get a quick scalp, decide on what type of trader you're going to be. Are you going to be a scalper? Are you going to be an intraday? Are you going to be a swing? One of the two. You can't, decide on you're going to do one and that day, the opportunity is not there to be that one. Okay, keep that in mind, right? But this is GBP USD, and it's very, very, simple to look for an opportunity based off of just liquidity, right? Once you understand higher high, higher low, what phase the market is in, it's game over, guys. It's game over. Just like this: high, low, high. This high is above this high. Draw a box. That means these cells got stopped out, and you can do this. Boom. Once you draw this right here, and you see this, you already know that this is coming, right? And above here is RTP, liquidity. Your entries will be here to trade toward liquidity. That's why I say, I can't go back. I keep thinking about the other chart. That trend continuation pattern is key, right? And the market's going to always pull back into structure usually. So, you're not going to get a perfect break and retest of support. It's going to come back into, using the 50% of this range, right? See how that works? Very, very simple, guys. All right, I'm going to open up with some questions here in a second. Just want to go over one more thing, right? Now, analyzing your charts, guys. How I analyze my chart, I do it very, very simple in the morning. I do like to go to a naked chart, right? And what I do is I simply do this, right? When I analyze a chart, I like to draw a horizontal line on the previous candle's low and the previous candle's high. Now, this is only for scalping purposes, right? I only want 1,000 points in the morning, so I'm not one to be greedy. So if you look at this, Friday's candle was this crazy looking spinning top type thing. I don't even know what kind of candle this is, but it was this ugly candle right here, right? That produced this wick. So we have a high and a low. I'll try to zoom in on that, right? We have a high and a low. Now notice if I draw a vertical line on here, this is the previous day's high. This is the previous day's low. The daily candle is this candle. This is the candle that's going to dictate your play for the day, right? So if you're going to get a scalp, it's coming from this candle. Next, what I'm going to do is I'm going to put the session indicator on your chart. Sessions indicator. And the reason why I do this is I want to see what happened on my chart during, the Asian session, London session, leading up to the session that I trade, which is New York. And then I'm going to draw a vertical line through the current day's candle, which this would be today's candle. From here, right? From here, I've already identified what phase the market is in. We already said that the market is in the phase of creating liquidity. We broke above a high, so we're making lower lows and lower highs, creating liquidity in this uptrend. So we already understand that, right? So bearish momentum is in the market, right? Go to the 15-minute time frame, right? And then basically what you're going to do is you're going to look and see what phase the market is in at the time you come to your chart, right? Now notice, there's two things that can happen. The market's going to continue to go to the previous day's low, which is the higher probability because why? We're creating liquidity, right? So there's bearish momentum in the market, and right here is the previous day's low, right? So look at this. All I have to do is identify how the market got here and where should it go. Now look to the left, right? We have a low, we got a break of structure here, right? Which means we have what? A high, right? So what's happening right here? The bank is doing, if we break structure, what is the bank doing? Creating liquidity by tricking buyers, right? So immediately I've already spotted liquidity right here, right? Immediately I've already spotted liquidity. So we already know this is RTD, right? So my goal is to get to this. I already established that I'm in a downtrend, and I already said there's bearish momentum in the market. Now, during New York session, we are right here, right? New York session opens right here. And then around 9:30 is, I think, 16:30, which would be right here, right? So right here is where the market is. So what do you think I'm looking for before I get into this trade if I see that the bank is making what? Lower lows, lower high, lower low, lower high, right? Lower low, and I see this bearish candle. Well, if this is the bearish candle, I can't enter. Why? This candle is in a push phase. You see what I'm saying? It's not up here. It's already below liquidity. And like, this is a 15-minute time frame. So things get bigger on the lower time frame, right? That's a break of structure right there. So that's a low. This is a high, right? I'm going to show it to you in 5 minutes so you can see it better, right? You see it? Break of structure, low, high. So same thing, guys. This is what I say. It's universal. Same thing. Look. If this is the break of structure, I know I can't enter. What is the next phase after break of structure? To create liquidity. Look what the bank does. It comes all the way back up here, right? So what's below here? RTD, right? And where's my long-term goal to get where? Don't forget about your higher time frame analysis below here. Your entry's up here to take out this order to be funded to get to this line. That would be your entry right here. I didn't trade today because I'm sick as hell still. I was at the doctor all day, but that's obviously my thought process. Do you see? The pattern is everywhere. If you enter the trade, if you'd enter the sell right here, which a lot of y'all would do, y'all would see market open and be pushing down. You would enter. Your goal would probably get down here, right? And then what happens? You enter the wrong phase. Look at all these bearish candles. You got 1, 2, 3, 4. You think it's going to be 10 more after that? No, it's going to pull back on you. That's just what the market does. And you should know it because if we broke below this low, then the bank took money. If the bank takes money, it's got to create money, right, to trade towards. And that's what it did. You see how universal that is? Right? Now the good thing about it is if you're on time and you analyze a chart during London or Asia and you can see this ahead of time, literally the sniper entry would be up here. That'd be the entry. And actually not even right there. Right? Actually it would be right there, but notice we know that right here is let me zoom a little bit. We know that right here the bank create liquidity. So now we have push phase pullback, right? We failed to break this high. You had an entry here, consolidation, and then the bank just trickles down. And then also we get the entry of this area. Do you see? You see how that works, guys? Right? You have to understand how the bank moves the market. And it all starts with the higher time frame. But I'm going to go back and show you this analysis one more time so you can see it from the top. All right. Now I'm going to show it to you with the moving averages this time. All right. Daily time frame. Right. Why is this doing that? Right. Daily time frame. Previous day's low. Previous day's high. Current day's candle. 15-minute time frame. Right. And then you have to analyze how did the market get here and where should it go? Look at it. Lower low, lower look, lower low, lower high, lower low, still lower high when they break this high, right? So where's the market going? It's obviously below this low because there's liquidity here. So that was a given. It was getting here eventually anyway, right? And then it's all about when you come to your chart, right? You could have got here right at London session and got it right here, right? Right on that little pullback right there, you could have got it. You see, it's like right at the moving average crossover. It depends on what session you trade. The market was right here, right? So what is your thought process? You're going to take a buy long term? No. There's liquidity below here to get before we go up. And then you have to remember what you're trading, right? You have to understand that this is still a pullback until we break structure on the daily time frame. We haven't broke anything major yet. Until we get below, honestly, this low, we're still in an uptrend. You see what I'm saying? You see how that works? All right, let's go to gold. Not gold. Well, let's go to gold. I don't even trade gold, but let's go to gold. Right? Same thing. All right, I'll do it on the naked chart first. Naked chart. Daily time frame. All right, and this way, look at this. This is daily, right? High, low, high, low. So what is this? Look. We broke above the high. What comes after the break of structure? A pullback. Well, there's a given right there. Look. There's your opportunity to sell. We know a sell's coming, right? So after you see that, right, if the market pulls back and we're already in an uptrend, then what's going to happen down this area? So let's look at this. That's your previous days. Actually, it was this one. So I guess that's today. Previous day's high, previous day's low, very vertical line, sessions indicator, right? 15-minute time frame, right? And then this is New York, right? Beginning of New York session, right? So look at this. I can easily see the pattern right here already. Look at this, right? You have a break of structure. What did I say you can do when you get a break of structure? Draw your pattern. See it? High, low, break of structure. What's the next phase? To create liquidity, right? If we're creating liquidity, right? Then where's the momentum? The momentum is to the downside, right? So right here around New York Open, we're already pushing down. So we can't sell. We have no major pullbacks yet. We cannot sell, right? This was a giving, right? Plus this is a bullish wedge anyway, right? So what happened right at New York Open, right? Market pulled up. We had a little bit of sideways consolidation right here. If I go to 5-minute time frame, see we had that little sideways consolidation. Then what did the market do? Broke structure, right? So now you have, it's kind of small, but we have a high and a low breakup structure. So what's below this equal lows? Entry would be right here. And then where is it going? You know it's going to where? At least the previous day's low, because we're in a downtrend. That's the reason why I draw the previous day's low, because I want that guaranteed money. Look where the market goes, to the previous day's low. We were already going in that direction, and that's where the momentum was going. Why? Because on the daily time frame, right, we broke structure, right, at a major area of resistance, by the way. And the next phase is for the bank to trick sellers. The daily candle was bearish. I have a bearish bias then. And that's the reason why I would trade to the previous day's low, right? That's how I analyze my charts. Very, very easy when you do it that way, guys. Especially if you just want to, if you want an intraday move. I wouldn't do that if you're going to swing trade, but if you want a nice morning intraday move, trade towards the previous day's high, previous day's low. Where it gets tricky is if price is already below or already above the previous day's high and low, then you trade to the next zone, or you wait for price to come back into the range to trade in or out of it. That's where it gets a little bit tricky. But most of the time, price is always going to be within the previous day's high, previous day's low, right? And like I said, we could do this on pretty much anything. We go to EURUSD, all right? I'll just keep showing you, how this works, so you can see it. Come on, computer. All right. So this is daily. All right, look. Previous day's high, Friday's low. This is your current day's candle, right? 15-minute time frame. Put session indicator on. What are you doing, computer? There, right? So, right, this is where we're above the high already. This is what I mean by coming in. Now look at this, right? Now we're starting the day above the previous day's high. Or did we start above? I don't know. Let's see. No, we didn't. That's 12. Your open is right there. All right, so look at the pattern right here. So we have high, low, high, right? So based on where the market opens at New York session, this would be a little bit tricky, but look at the pattern. You have a high, you had a low, you have a breakup structure, right? So if you're not at your chart or to Asia, you're not there for this. You're not there for this, right? We know above this high is liquidity, right? So if you haven't entered, if you're not in a buy already, right, then there's no need to even get in the buy because why? The market is already in a push phase, right? Market break structure. What comes after a break of structure? A pullback, right? So if you go to the higher time frame, you can double check to see what phase the market was in, right? What phase was the market in? The market was in the phase where the bank is doing what? Creating liquidity. We broke above these highs, and now we have to do what? Pull back. So I have bearish momentum in my brain anyway, right? That's a 15-minute time frame. Right here, right? Right here, market starts to do what? Push to the downside. Now, this is where it gets tricky. If the market is already pushed to the downside and you don't aggressively enter here, it's really not a point to enter just yet. This is the previous day's high, right? Remember what I said? If we're already above the previous day's high, then we need to do what? Wait for price to come back into the range. Notice that we do come down, we break structure, right? We get a break of structure, right? And then what do we get after the break of structure? The bank tricks buyers. Below this low, it'll be your what? Your RTD. And your entry would be above the RTD, right? And then what is your goal to get to? That previous day's low. Entry would be here, above here. Stop to go above previous structure, a few points behind that, and then you're in that trade, trading towards where? The low. If you got to this trade up here, wasn't much going on. Well, that was 50 pips right there. They always say you get 50 pips, so that's 50 pips right there. So what's the bank doing? Broke structure. We pull back. Below here will be what? Another RTD. Where's the bank going to go? Take this money until it trickles down to that low. You see how that works? First is a little bit tricky though. You see that? All right. So hopefully you guys got a good idea of what to look for. All right. So I'm going to open up with some questions, and then we'll talk about stop losses and entries after this. All right. Does anybody have any questions? I'm going to open it up now. All right. Does anyone have a question?
I do, Jared. How you doing?
I'm doing all right. How are you?
Doing pretty good. Hey, Jared, I still get a little bit confused when you're showing the reversal pattern in reference to the continuation.
Reversal pattern to continuation it's got to be one or the other. There's not both. It's got to be one or the other. Reversal or continuation pattern.
Right. I mean, how do you identify which one it's going to be? Where do you draw your line and say, okay?
If the market is in an uptrend, then you're going to be trading trend continuation pattern. Now, it all depends on too is where, like, let me go back to US 30. The computer is slowing down. Let's stop it. Nothing. Like, you see how the market is in an uptrend, right? We're in an uptrend, right? So you have to realize on the 4-hour time frame that the world is big. So if you are trying to trade today, right? Well, on the lower time frame, that's going to look like a downtrend. See, it's going to look like a downtrend. So you have to trade with the momentum of the day. So the momentum of the day is telling me that we're in bearish momentum from the daily time frame. We broke structure, so we're creating liquidity. So if the market is making lower lows and lower highs, and you come to the chart and you see that the market is either consolidating like this or it's made a move like this, right? Then you have to understand that until we break above this high, we're still in bearish momentum. The momentum is still bearish. Now, if you get this break of structure, you take this buy, that's fine, but don't take this buy with the goal to get above this high if we're not done pulling back. Now, how to determine if you're done pulling back? It's all about understanding imbalance of what you see to the left, right? So in this situation, if you see the market above this high, right? And this is where you're looking to take a trade and you have a bullish bias, you can easily decide that this is a trend continuation pattern, right? Because you have a low, a high, a break of structure, a retest, an RTP, and you think the market's going to continue above these highs from that. You can very well do that. So, in some cases, it's subjective, right? In some cases, but it all depends on what you see on the higher time frame. Like the daily candle is bearish. I have a bearish bias. I'm not going against that candle, right? The system is telling that the market is going this way, right? So I'm going to hold off on taking a sell right here and keep my bias. So it's you kind of have to kind of go with the momentum of the day. You can't just predict that a bearish candle is going to do this. And it's like common sense. If the bearish candle is bearish like this, in order for it to go above this high, it would literally have to start doing this and then flip, right? So, so you have to look at the news. Is there negative news today? And then look at liquidity. Like, is there liquidity for the bank to trade toward on that higher time frame, right? When you look at the 4-hour, what do you see, right? I see a low, I see a lower high, and I see liquidity below this low. Do you see what I'm saying? So, like, you have to identify all of that. The market's making lower lows, lower highs. So if it's still money here, the bank is going to take that money before it goes up. You see what I'm saying? So, like, you don't want to get lost on the lower time frames without understanding what's still going on the higher time frame. And that's, like I said, like that takes practice. Even sometimes I would get caught up on something like that. But it's the reason why I always go for 1,000 points and then lock in my trade. Because if I did take the buy, right? Say I did take this buy right here, right? Say I did take the buy, right? I'm going to guarantee 1,000 points. If I think the market's going to go up here, I'm already at break even and I'll get stopped out by this move. You see?
Okay.
And another thing too is this is a 15-minute time frame. So if I saw something like this, you see all the imbalance in this candle, I'm going to do this. And it's not going to matter. I'm going to see low. I'm going to see a high right here, right? And then I'm going to do this. I'm going to put a box here to see if the system agrees on the 1 minute. And I'm going to go all the way down. Let's go to 5 minutes. I'm probably too far away. Right? And then see the arrows, right? The arrows are going to be there. I go to the 1 minute time frame. I even have more data. Is that it right there? Yeah, that's it right there. You see the arrows?
Uh-huh.
You see what I'm saying? So like I could get in down there, right? And it sucks because sometimes the market does this shit. It's you have a huge push phase. So, you get that pullback. There's an RTD around here. Sometimes, you gotta wait for it or enter aggressively. I might enter right here, or wait for the retest, RTP entry, and then take the trade up to this area of TP. It actually goes to the wick. You see that?
Uh-huh.
But if as soon as I see the pattern, I know what's coming next. And that's a 15-minute time frame. A 15-minute pullback on a 1 minute is a huge move. So I'll probably take that trade, but I've taken that trade with the understanding that overall we're in a downtrend, but we're in a downtrend of the bank creating liquidity. You see what I'm saying? Like we're in an uptrend, right? We broke structure. We're making lower lows and lower highs to create liquidity in the downtrend, right? Because this is a downtrend in a 5 minute or 15-minute time frame, which means I can trade like I'm in a downtrend in this price action until price does what? Gets to the area to take the buy on the higher time frame, which could possibly be right here, right? And then I can go down to the 1 minute time frame. And I would have got in right here where these arrows are. You see what I'm saying? Because if you look at the 4-hour, right? This is what I'm saying. When the bank takes liquidity, they create liquidity, right? So, I mean, look at this. This is a wick right here, right?
Uh-huh.
We broke below the low. This wick stopped these buyers out. So when the bank takes money, they create money. That was an opportunity to buy on the 1 minute. These two candles is this huge move on the 1 minute time frame. You see this huge move.
Uh-huh.
See,
That's a
that's
lot
what
of
I'm.
pips.
Yeah, so that's what I'm saying. Like you have to understand what phase the market is in, and you have to analyze a higher time frame to catch those moves, and then wait. You can't just be, trading what you see with a 15-minute, 5 minute time frame because you're going to get lost. You're not going to know like that. You're going to be trading a downtrend, right? And then the market could already be here, but you're still trading like a downtrend. And right when you get it to sell, boom, it goes up because you didn't know this was going. This was the phase that we're in a pullback on the higher time frame. You don't know it. You're still trying to trade a sell, and now it's ready to go up because you didn't check to see what phase the market is in. So that's what I'm saying. Like you have to know the difference between time frames, right? You have to know the difference before you place a trade on the lower time frame. But if I were to take a sell in this, I'm taking the sell with the notion that I know I'm not trading a full-on reversal. I'm trading with the momentum of this pullback, which looks like a downtrend on the 5 minute or 1 minute time frame. That's what I'm trying to tell you guys. All of this that you see on the 15-minute, 5 minute looks like a downtrend. You would get lost. See, looks like a downtrend. Look, looks like a downtrend. Then when you get to the 1 hour, it's like nothing. 4 hour, it's nothing. See? So if it's doing this all week long, you're gonna think you're in a downtrend, but you're in an uptrend. You see?
Uh-huh.
Right? And then like overall, because that pattern is universal, when you look at the chart on the 4 hour time frame, you can kind of see where liquidity is, where the liquidity is, right? Because every time there's a break of structure, right, the bank's going to create liquidity. If it went above a high, right, it went above this high right here, this huge high. So, what do you think the bank's going to do once it gets above that high?
Pull back,
Go this way.
create liquidity.
Go this way. If you notice, there's tons of imbalance right here that hasn't been caught yet, right? And notice that this imbalance area runs right into what? Support. You see what I'm saying? So so where the market should be potentially still going. And I don't foresee it going up. It could go up a little bit further because it's like a reversal point. It could go up a little bit higher, but we're going to get some type of a pullback, eventually in that area because we broke above a high. You see? That's the part, that a lot of people got to get. Like, even like right here, like you see how we went above this high, right? So if you see that on the 4 hour time frame, you should already know a pullback is coming because in order to go higher than that, it's got to go this way to create liquidity, which means all week long, you're going to be selling. So right here is selling all week. Right? If I go back to the, I don't think I can go back that far, but you get my point.
Right.
Get my point. Because every time there's a break of structure, the bank has to create liquidity. Right? And then once the market starts trending, like it is here, like it is uptrend, or look at the 4 hour, we're at an uptrend, then it's all about identifying the phase the market is in that uptrend. It's all about, doing this. We clear this up. Right? It's all about looking at the uptrend and going, okay. All right. So I know we're bullish, right? So what phase is the market into this uptrend? Right? Like say you saw the market, we were right here, or we're right here, right? Then you can't do nothing. This is a push. This is a push phase. You see what I'm saying? Leave it alone. Let it get above. Yeah, can you hear me?
Yeah, I can hear somebody else.
Yeah. If you haven't got above this high yet on the 4 hour, leave it alone. Once you get above that 4 hour, then you can start warming your heads up for an opportunity either to sell or buy. Just understand your sell is going to be low probability because it's what? Going against the trend, right? And then your buy is going to be a high probability going with the trend. Do you see what I'm saying? That's all you have to do, right? Does
So
somebody else have?
you basically get in either way depending on what phase
the market is in. Yeah, just understand the probability behind those trades. Low probability against the trend, high probability with the trend. But understand the difference between the time frames too, because when you go against the trend, you're going to get this, rocky movement. When you go with the trend, it's going to be smoother. So understand, if you trade against the trend, it's going to be a rough patch. All right. Does anybody else have a question? Anyone else?
Thank you, Jared.
Yep. Anyone else have a question? Nobody else has a question?
Can you hear me?
Yeah, I can hear you.
Yeah, so basically, the highs and the lows of the day, once it breaks the structure, you want to look for the liquidity that they're about to wipe out, and that's the direction you want to go. Basically, is what you're saying, right?
Exactly. Yeah. Exactly. It is all about time. If you traded currency, I'd be there right before New York Open. If you traded US 30, there's going to be some days where you're going to want to wish you entered before the 9:30 time, but the spread is too high, which gets me. So, like today, I probably would have definitely wanted to be in the trade before 9:30. But for the most part, you want to make sure you're there at the beginning of the New York session, right? Because your setup is probably going to be present. That's where the reason why I say it's because the 15-minute time frame, like the beginning of New York is right here, right? And as you can see, we have a low, a high, a low, and a high, and liquidity here. If I'd have entered here at the beginning of New York, I'd have been traded toward this low, and I would have been in this early. This would have probably gave me a heart attack, right? Because honestly, when this happens, we run right back into an area of support right here. So I would have thought that this would have been like full on continuation to the upside. I probably would have panicked, I gonna lie. Right? But I would have been guaranteed 1,000 points and closed already. Right there. See what I'm saying? I would have already had 1,000 points and probably a little bit more before this even happened. That's the beauty of it, you know. But it's all about understanding, what you see in between that high and the low. It's all about the pattern you see and then what the momentum is for the day. And we already know that the bank was doing what? Creating liquidity, which means we're making lower lows and lower highs. We already know that the bank took money from sellers. That's the reason why this pullback happened. We never broke this high, so we're still where? Downtrend. And there's money below here. My goal is to get that money. I don't care if I entered here, here, here. I need to get to here. That's where the goal is. You see? And the banks know you want to get there. That's the reason why they do this shit, to scare the hell out of you. You know? Why would they break above this high and they go this way? You know? Well, that's it.
Yes, I can see I'm slowly getting it. I guess the more I attend, it's gonna sink in. It's all about doing.
Honestly, the thing that I've been doing the most is, I used to try to just catch every breaker structure no matter where I was doing, but now if you look at it, let me go back to, let's see if this broker is working now. Yeah, it's working. All right, let's go back to this one. All right, so when you come to your chart, right, that 4 hour is where I'm looking for. I'm looking for the setups. Like I really want to see like a clear break of structure, and then where the market could possibly pull back to before I can get into the trade. That's what I want to see. And if you have to get that intraday trade, have an understanding of why the market is doing this on the 4 hour by going to the daily, right, and seeing the reason why we're going up, right? If I zoom out, do you see this? Oh shit! You see that?
Mm-hmm.
Low, high, break of structure. Now I know that we're doing what? Creating liquidity. So I already know why we're in an uptrend. So I know to trade up. You see, because this is daily, so this is big moves. So look, we have a high, a low, a high, a low, a high, a low, a high. So say I came to the market and it was right here above, and the market was above this high. I know that the bank has to create liquidity and it has to do it off of resistance. If I draw a line here, look, see how we hit resistance right here? I could put a box right here and make that an area of interest. Go to the 15-minute time frame. See the arrows? Because I know a pullback is coming. That's a daily pullback. And then what's my goal? I want 50 pips. Overbought, signal line, bearish momentum. Look, push face, pullback, entry. And then where's my take profit? Let's look for lows. All right, here's a low right here. Smashed. You see? Now I only want 50. So if I entered here, I got 50, 60, 94. You see what I'm saying? Like, I know where it should go, because it's a pullback, right? We broke above a high. In order to go higher than this, we have to create liquidity. There's a pullback. And then once the market pulls back, this is going to start giving me clues that we want to go up, right? I don't care if you draw a trend line, right? You should know that there's liquidity above this high if you were to trade toward it. You see what I'm saying? So look, break of structure, pullback, entry, RTP, and then the market will go up. Boom. You see? And that's the part that, a lot of people just have to be able to identify on the chart. And, and that's going to take practice if you're new to looking at the market this way. It's going to take some practice. You have to be able to just spot the phase. Just like if I were to look at this type of price action right now, right? This is a 15-minute time frame. And I see this move to the downside, right? We were moving sideways. We broke below a low, right? If I zoom out, we're in an uptrend, right? Oh shit, I can do that, right? we're in an uptrend. So if I saw a break of structure to the downside in an uptrend, then where do you think that where do you think I'm going to go next? Above this high, right? There's a stop loss above this high. There was a seller. He put money up here, right? There's money up here that hasn't been taken yet, and we're in an uptrend. Look, low, high, low. And we have a break of structure. So what's next? Push phase, pullback, entry, push phase, pullback, entry. So let's go back to GDP. Look at this. It's 15-minute time frame, right? So I'm going to mark this so I don't lose it. And this is how accurate the patterns are, guys. Right? Look. Push phase, pullback. Notice it fails to break the low. Above here, I had to get rid of the moving averages so those are out of the way. Right? Above this high is what? RTP, my reason to push. Right? And if you wait for a price action candle, just wait for an engulfing candle. RTP. Right? Yeah, your entry could be right here. Right? Long as it's below this. Entry could be like right in this little area right here. Right here. Stop loss goes below here. Right? You enter here, and you're in the trade. Now your goal is to get to where? Your goal is to get above this high, or what? Are you scalping today? That your goal is to get to this high here because they sold. There's a stop loss in this area right here. Just make sure all wicks and buys get hit, smashed. See what I'm saying? Oh, because the market's not going to go in a straight line, so it's going to do what? Give you money, take it all away, but still fail to break this high, and then do what? Go above the high you want to get to right here. See? That's just where, the balls play in. See how it goes right to the wick? See that? You see how the market moves? It's crazy. Once you understand that pattern and how to spot it, right? You have to train yourself to stop trading inside the consolidation and wait for the breakout and not try to trade this. Like people will see this sideways movement, right? Fake out, right? Fake out. And then this happens, right? And then when this happens, FOMO sets in right here. You sell, profit, drawdown, right? And then when you're in drawdown, you come back to your chart, you came back to break even. Shit. Do you see what I'm saying? This is the push phase. You cannot enter in that phase. You gotta let it go. And that's the part that it is tricky. It's really tricky, and you won't see it unless you look at the higher time frame. Like if I go to a higher time frame in this area, you're not going to see all this noise. If I go to the, see what I'm saying? Like, see how it just looks like a pullback. Looks like why would you be trading in this anyway? We're in an uptrend, right? We have a break of structure. We know the bank has to do what? Pull back into support. Your little break and retest type rules, right? So we should already be looking for buys without seeing all that noise. You see what I'm saying? Should already be looking for it. Like I said, once you start to be able to draw the pattern over and over again, you'll start getting better at it because, like I said, once you get a break of structure, you can keep drawing the pattern over and over again. Once you get this, you can go high, low, and draw the lines like this so you can see it, and then go to one of these charts and pick which one you want to use. Are we in an uptrend? Yes, I'm using this one, and then, there it is. Push phase, pull back, right? A little bit of up and down movement, right? RTP is above this high. As long as you enter before price gets above here, you should be all good. Even if you entered here, you go to a little bit of drawdown, that's fine. When you enter here, stop loss should be going below previous structure. You should be good, right? And then take the trade. Take the trade. Or put a fib on it. And then, pick a zone. What discount do you want? Do you want 50% discount? Do you want either way, previous structure's down here. So you make the best of it. Either way. Right? Anybody else have a question? No questions? Anyone? Right around 10 o'clock, so. My neck was killing me.
Yeah, I don't have a question, but I just want to say literally that like last 15 minutes, if you just got that like That right there is just genius. Period. It's just wow, mind blowing. That's all I gotta say.
Yeah, yeah. Well, I mean, like, yeah, once I said, like, once you see this on a bigger scale, it's different. You know, it's just like I said, even when you see it though, then you try to trade it live, it's still manipulative. Like, it's still very, very hard to trust. It's just like I know what it's supposed to go, but why is it going that way? That you know, some of it you just gotta let it. Sometimes you just gotta let it go. You know, the better your entries are, the less stress you'll be. But you still, like I said, it's not easy. It's just the probability of you being wrong trading these patterns is going to be a lot less than you trading those, you know, retail concepts where you're trading breakouts and double tops and double bottoms without understanding, you know, what phase the market is in before you enter the trade. Your probabilities are going to be a lot better, you know.
Yeah,
Just
yeah.
like I did take this trade on my phone. I'm gonna show it to you. I took this trade on my phone. I don't even trade this Mexican peso, but I took it on my phone today, right? So look at this, right? I'm not even in this. Am I in this? Let's go to this one. Mexican peso.
Mm,
Right? Are you gonna open? Why aren't you opening? All right. All right. So,
Woohoo!
all right.
Wow.
So, yeah. So look at this. This is yeah. This was it right here. So look at this. The market was making lower lows, lower highs, lower lows, lower high, lower low. Look, low, high, right? So what's the next phase? To create liquidity. So I just did this. Put a line here, I zoomed out, and I was like, support, support, resistance, resistance, and then look, right? And then when I came to the chart, the market was already right here, right? Market was already right here. So look, right? Market was already right here. So what is this now? Break of structure, low, shit, right? That's your high, that's your low. And what I said, for the market to pull back, we have to do what? Run into resistance. There's resistance. The bank tricks sellers. Above here is an RTP. Here is your entry. Bank has to take out the RTP. Look, boom. I didn't stay it this long. I think I wrote it like right there. But look at that shit. Isn't that crazy? And then even up here, right? Now you have breaker structure that does what? Runs into resistance. So what do you think is going on right here? Opportunity to sell. Because the bank has to create liquidity now. Look at the sell. Push phase, pullback entry, RTD, boom. You see? See how that works?
Yes. This
Yeah.
is
It's
beautiful.
yeah, it's all over the chart, you know. The only one that is really weird with is gold. I don't know what it is about gold, but gold shows you one thing on a higher time frame. Like you literally like for me to trade gold properly, like I have to just enter on the hourly time frame or 30-minute time frame. You know, gold's weird, you know, because it'll have a big move and then consolidation, but you know, when you look at this on the daily, right? You see how it looks? It's all over the place. So it's, you know, it's not really it's like no real trend. So like, you know, I don't understand gold right now. You know. So it's not worth trading when it's doing this. But, but you know, the stuff that's really trending, you know, I would stick to that stuff. But you know, that's it, guys. Uh, and like I said, you know, as far as your entries and stop losses, it all goes below previous structure. So wherever you enter, previous structure is where you're going to take your trades. If you take a 5-minute entry, right? Right. Say you took an entry. This is gold. I'll look at gold. Like, like say you took an entry right here, right? and the market goes up and comes down, and you entered here, your stop loss has to go below this structure here. Somebody snoring on the call. All right. So, your stop loss has to go below previous structure. You take a trade up here, you have a push phase, pull back, you enter here. Stop loss to go above the previous high or above the whole high. Just depends on how aggressive you want to be with your stop loss. Same thing here. You enter here, stop loss goes below here. At the moving average crossover. All right. Don't make your stop losses, don't put them anywhere you want to pull them. You have to put them where they make sense because the market will come back and take it if there's liquidity there. Just keep that in mind too, guys. Right? Something like this. You see how there's a break of structure? Like to get into this trade, there's the breakout of consolidation. But there's your high. Liquidity, your entry should be right here. So if you enter here, stop loss goes above here or above here. Don't just put it like right here, right? Make sure, right? And then get into that trade. Once it goes into profit, you can go to break even. But don't put your stop losses too aggressive to protect money too tight because the bank will come and get it, right? So that's the entries. EUR USD looks hideous right now, man.
Hey Jay, I got a quick question.
Yes.
Like when you do your stop losses, do you do it by pips or do like a number of pips, like 20? I'm just using an example. Or you just go strictly off the structure and where you got in?
I do it strictly off the structure where I got in, and that determines what my lot size is going to be. With US 30, I'm a little less conservative because I will put the way I enter the Treasury US 30, I always have a 300 to 400 pip stop loss. So I'm always prepared to lose like almost $1,200 on a trade on US 30 because of the lot size I'm using. So US 30 is a little bit tricky. Like if you don't have a good entry, you're always gonna have a big stop loss, regardless. And a 300 to 400 pip stop loss on US 30 is good. Unless you're entering on a 1 minute time frame perfectly. So with US 30, I'm always prepared to lose $1,000, depending on how big the stop loss is. I mean that's what the account is. And I'm using a 15 cent to 20 cent lot size per trade. Right. And I'm not compounding my trades as like I used to for a while. So, it's just kind of one trade at a time, 1,000 points.
I normally sometimes I put mine too high, get out when it's reconsolidating before it goes back up or goes back down, which I was predicting. That's why I was asking. But I hear what you're saying.
Yeah. I do a lot of market execution, so it's you got to be really precise to be there to enter. And a lot of times, because I do market execution, I'm watching the RTD being created. So if I'm watching the RTD being created and I know I'm entering trade toward liquidity, then I'm usually not in drawdown very long. Now, if I misjudge it, which that happens a lot, sometimes I'll misjudge. I'm like, fuck, that was too early. Then it'll kind of keep pulling back on me. Then I did draw down, but my stop loss is still 300-400 points. But I'm still eyeballing it. So if it gets too much for me, I'll close before it gets to 300-400 points. But a lot of the times, I'll hold it, right, and then it'll come back because once you spot an RTP and you're confident in it, the market should just make lower lows or lower highs to trade toward it. Now, if I'm wrong about the RTD, then I'm just wrong about it, and I should lose that trade anyway. That's just part of it. But I try not to enter a trade unless I'm trading toward liquidity. So if I don't see it yet, then it's too late. Like if I saw this candle right here, I'm not entering a buy right here. I'm waiting for it to break structure, pull back, so I can see this to enter a trade toward it. You see what I'm saying? Like I want to see this movement and then spot what's above it to trade toward it. I don't want to be like, fuck it, I'm just gonna buy. You know what I'm saying? Because if you make money, it's coming right back to your entry. You see? If you enter a breakout, it goes up. If you don't close here, you lost all your money. Right? But if you enter toward liquidity and it goes up and pulls back, you're still in profit. Even on the pullback, you're in profit. You see what I'm saying? So that's the other thing about trading with with the banks and not trading above these highs is that if I make money by trading the breakout, well, if I don't close, I lost all the money. You know what I'm saying? So that's just like common sense of the market. If I enter here, and then by the time it gets back here, if my entry was here, I'm still in profit, right? But if I enter in the above the high, and I go into profit. Now the drawdown until it continues. So you wait for the appropriate phase before you enter the market. That sucks because you're entering the market while the market is going in the opposite direction. It's scary. You're like, well, it's buying now. Why would I sell right here when it's buying? It's but that's you have to get over that concept. Right? Any other questions, guys?
Hey, this the best Zoom ever, dude. No disrespect. The other ones are good, but tonight is top notch. Tonight is it.
Yeah. I'm glad you have the eye opener, and start doing this on the Decker chart too. That way you won't be so focused on the arrows. You'll notice, like, if you saw this chart, this is the chart that I always trade on. See how I don't have no arrows? I don't use the arrows. And if I do use the arrows, I'll go to it just to see if it helps confirm. And then I'll look and see. But I don't need the arrows. Like, you see, I have a template that says no arrows because you don't want to get fooled by the arrows. You want to spot liquidity and then let the arrows confirm. That's it. Don't use the arrows. You notice I didn't talk a lot about the indicators down here at the bottom because all they do is show you that there's a change in momentum in your area of interest. Like, once you spot liquidity, like say you're in the uptrend, right? And you see that there's a breaker structure like this, right? You see this breaker structure, right? And then you see the market has pulled back, right? Or say you saw this pullback right here. And you spot this as RTP, right? Right here, if you go to the 5-minute time frame, right? And the arrows are here, all you're gonna want to see is change in momentum, oversold. When this signal line comes outside of the graph, that means bullish momentum is coming into the market. When the MACD flips, we know it's there. When this is green, we know it's there. You have moving average crossover. Do you see how many confluences that is after you've already spotted this? You see what I'm saying? It's just added confluence. Like, you have all this bullish momentum in the market in your area of interest. And you have what? A push phase, a pullback, a RTP, and then your entry trading toward the RTP to collect an order. This is not your take profit. This is the collected order. So the market is funded to go to where? Take profit 1. This would be take profit 1. Anything above that would be take profit 2. See how it goes right to it? See what I'm saying? Like, that's what you have to understand about these indicators. These indicators just show you change in momentum. That's it. Nothing else. Just like right here. See how there's the arrows? Oversold, signal line, bullish momentum starting to form. And then I see what? A push phase, a pullback that fails to break the low, RTP entry, mark goes up. Right? Same thing here. Overbought, signal line outside the graph, bearish momentum. And then what do I see over here? I see my pattern. High, low, low, and then what's next? To create liquidity. So where's the first place it could go? Right? At least to this low. Why? Because there was buyers, and these buyers need to be stopped out. That's why it came all the way past here. When the bank takes money, what do they do? Create money. And then they enter again to take the money they just created. That's why the market continues to the downside. And that's all you have to know about the market, guys. Now, once you know this, and you know the value of the asset, then you don't have to try to trade all day because, like I said, 1,000 points of US 30. If I go back to this. Right? Like 1,000 points of US 30 is all you need. So like this little move right here, like if I spotted this opportunity for a 15-minute time frame, right? And I did this, I went boom, and then put a box here, and then went to the 5-minute time frame and did this. This could be my work day. Look, oversold, signal line, bullish momentum. Then look, you see how this wick goes above that high? That's a breaker structure. What is the next phase? To create liquidity by tricking what? Sellers. We failed to break this low. We're at the beginning of a moving average crossover. Right here is your RTD. Here's your entry before price breaks that. And you put a 20-cent lot size and take this trade. That's your work day right there. That's 1,100 points. You see what I'm saying? I'll take this trade and close the lots up for the day. I don't care if the market goes all the way up here. I can do this every morning. I could lose 3 times and then catch one and still profit for the day by just catching that, right? Or I could have saw this, right, and did this low, high, make this my take profit, this wick, because I know there's liquidity here, and then just rode it from here to here in a 5-minute. 2,100 point. That's my work day. I'm done. I don't care what longer. Just keep doing that every morning. You see what I'm saying? That's the beauty of when once you understand liquidity, then you trade an asset as valuable as US 30, and now you're working 15 minutes. You ain't got to work all the time. I come to my chart at literally 9:25. I can analyze a chart between 9:25 and 9:30. That's how fast I can analyze a chart. That's my work day when I trade US 30. That quick. Because I already know what phase the market is in. Even if it's already over here, I can dictate what's going to happen or what should happen. And sometimes I can be wrong, right? Because today was tricky. I might have thought that this was a potential buy, but even if it was, this has to be that's a push phase. So I'm not going to buy. I need to see a pullback, right? I need to see a pullback. Once I saw that pullback, as big as that purple candle was, the daily candle was still bearish. I'm not buying, selling. And this is going to be lit up red. You know what I'm saying? This indicator is going to be lit up red. This indicator is going to be lit up red. But because of bearish momentum telling us to take a sell, not a buy. So, very, very simple, guys. Oops, let me click that. Right. Any other questions, guys? Anybody have a question? Anybody lost?
Just quickly for the sessions template there, what are the colors represent? What
green is Asian, the red is green is Asian, red is London, blue is New York. So when they overlap, that's when London starts. When this overlaps London, that's where New York starts.
Okay.
Yep. That's what that means. Yep. And that's it, man. I don't know if anything else to go over. Just now it's time to just go to your chart and start marking it up. Even if you go on TradeView, just start looking at what happens every time price breaks below a low. And that right there will be an eye opener. Just start doing this on higher time frames. Just start doing that. And then when you do this, do it to the high. And then look at your pattern. You're gonna be like, holy shit. Every time you do it, look at the pattern. Push phase, pull back, entry. Right? Or do it this way. High. Push phase, pull back, entry. That's the part that's will get you. You're gonna be like, damn. And then when you do this on a higher time frame, you know that every move after that is going to be a big move on the lower. Then you go down to the lower, you enter. That's the thing that you have to realize, right? If you see this candle, don't buy it. Already bought. It's too late. Let it pull back so you can buy towards it. Don't just try to buy it. That's another thing too. These are the candles that create FOMO. It's buying. Oh, okay. And you buy at the top of this, you get caught in drawdown, right? So just remember that. Like, there's certain phase you enter and certain phase you don't enter the market in. Do not enter in a push phase. As bad as you want to, don't enter in a push phase. Right? And then, like I said, don't get lost on lower time frames. You see how the market looks on US 30 to 15-minute time frame? See how this looks, right? But all that is this. That's all that is. It's the uptrend. High, low, breaker structure. It's just lower lows, lower highs, producing a pullback. Understand that about the market. We are in an uptrend, but we're going to look like we're in the downtrend on the 15-minute time frame or 5-minute. You see what I'm saying? Understand the difference so you don't get lost on the lower time frames. So you don't get lost. All right. And that's it, guys. I'm going to go try to breathe now. Oh, I'm on the struggle bus. All right.
For the lesson.
Yeah, hope you guys got some value out of this. The more I learn, the more I'll show you something new. But right now, this is how I see the market, and this is what works for me. I'm not an expert yet. I wish I was, but the way I word it is what helps people because I watch a lot of other people teach and I'm still like, what? They're not explaining it the way I'm explaining it. So maybe that's the reason why people are doing so well with this. There's a guy that does way better than me. And it's like I just took what he already does and enhanced what he already do. Because I think he understands smart money concept way better than I do. Because he enters with buy and sell limits, and I can't do that. I just don't trust it. I have to do market execution every time. So but
Can I ask? I've noticed that I haven't seen any RSI. Is there a reason why you don't use it or implement it?
RSI, to me, there's not much difference between RSI and stochastic. I don't really. I mean, you talking about what's on my chart? You talking about this?
Yeah, no. Like I see that you don't use it, and I kind of
Oh
use
yeah,
it.
I don't. I mean, you can replace the stochastic with the RSI. There, it's pretty much the same. It shows overbought, oversold. I mean, it's not about the indicator. It's about price action, and the indicator just lines up with it. So I could put an RSI on the chart, right? I don't even know if I have an RSI here, do I? Like I could put that on the chart, right? And it's going to do the same exact thing as the stochastic. Below the 30, below the 20, same thing. You see what I'm saying? Like, it's pretty much the same to me. See the arrows? Below the 20, below the 30. Same thing. So I think the stochastic is a little more accurate, but you see how it looks the same? So yeah. I mean, you could use the RSI if that works for you better. But you gotta remember too, indicators are only there to help verify analysis. You still have to know how to trade. So don't rely on the indicators. I think, when you buy the system, you rely on the arrows when you want to. There's no arrow system that's perfect. Even that simplicity crap that I see, that thing is the worst because it enters you in the trade in the push phase. Like the simplicity system, it'll put an arrow right here, sell right here, and then you get caught in this pullback and don't know why. His first system was better than the simplicity system. Like you'll see simplicity system, it'll have an arrow right here, buy, right? But this is a push phase. So yeah, you would get lucky, right? That one you get lucky, but this person's buying to get way up here somewhere. So everything that he just made, if he holds, he lost. So, so like it's the wrong phase into the market. So like why is the arrow popping up right here? Like it's not about the arrows. It's about what you know about the market and do the arrows agree with your analysis. If you come to the chart, you see the arrows there, then you analyze the higher all the way down to the lower to see if you agree. But don't just trade the arrows. That's not going to work. Not going to work. They're just there to verify analysis. If anything, they should trade to want to use to want to not use them because eventually you want to be able to do it on a chart. So, and we're so overextended right now. So like, buying pressure right now is about to be null and void. If we go any higher than this, I'd be surprised if we get up here. That'd be something. I don't know where the market's gonna go. I'm hoping that we're dropping though. That would be dope if we do drop. Because if we drop, guess where we're going? Below these lows. So so maybe we'll get lucky with that drop. All right. Hope you guys got some value out of this. I'm going to end it here. Hopefully this wasn't too long and it won't take too long to upload. If it uploads tonight, I will post it tonight so you guys can rewatch it. All right. But that's going to conclude tonight's trading, and I will see you guys on the next one. All right.
Appreciate it.
You're welcome, guys. Have a good one. Bye-bye.